price to remain within that compressive period. So major distributions. Very, very light. Is the majority of the volume that's created in a session or cumulative sessions. A value area is 70% of the volume that's trapped between two levels, which happen to be the value area high and low. The point of control is the largest level of volume traded on that volume profile, regardless if it's a session or a cumulative volume profile. The point of control is going to be inside the value area at all times. Ledges are what encompass the distributions. Ledges are areas where price drops off super aggressively from a high volume to a low volume node. You can see this is a ledge where you have a lot of volume and you have a drop off. This is a ledge, right? These are ledges where volume drops off. A distribution is the cumulative belly block that is entrapped by two ledges that creates these areas. Distributions are one of the main things that we're after. When we can find very large, thick distributions, we can apply distribution theory or auction theory to analyze the potential of the move, which is exactly what we did today in our live trading room. Then you can have cumulative sessions versus single sessions, right? Session profiles are each individual session, extended hours trading and regular hours trading, or extended trading hours and regular trading hours sessions have each their own individual profile. And then when you have a cumulative profile of multiple days, that's where you can find these very large distributions. Because when you see where volume's been traded over weeks, months, years, there's a lot of validity in those areas. So it's very important to understand how cumulative session profiles work as well. When we talk about understanding market directionality can be understood by using distributions and distribution theory. Remember yesterday we had talked about how prices tend to move from balance to imbalance, right? You have a balanced area, which is what we would call a distribution, and price has found its home there, right? Price is very happy about that. It's having a good time, right? It's nice and warm. So price in this normal distribution, and again, value areas aren't necessarily going to be normally distributed like this. This is why we focus on distributions more so than value areas. Keep that in mind. So price, when it's within a distribution, it rotates its happiest, doing what it wants, right? And then at a certain point, you get an extension move that breaks the distribution. How these movements work in the market, price is exploring other distributions, higher or lower, to find validity in that move. And this is how price action moves, right? Price exploration happens from distribution to distribution, right? So this is how the market moves. And when we understand that, and more so when we understand where these distributions are, we understand what the directionality of the market is, right? Why would I be bullish if the markets ran so aggressively? I remember someone...
Yeah, sí.
From a compressive period and has run into an expansion and has now accepted another compressive period from the past. So the expectations are priced to remain within that compressive period. So major distributions, prior session volume profiles. These are very, very important to understanding directionality in the market. When we look at distributions, finding distributions are mainly found on a larger volume profile chart, right? You look at multiple days at a time of a volume profile, and that's where you'll find the big distributions. They're usually very large, so a large distribution can be defined at like 30, 50 points realistically. You're not going to find large distributions that are like 15 points. You're looking for these very thick areas which present the opportunity for those very large moves in the market. So this gives us an overall quote-unquote macro view of the market, what the market sees, how the market seeks balance. So, for example, you can start on TradingView, right? This is a very basic tool that a lot of people are familiar with. If you don't have Sierra charts, if you're new to Sierra charts, I suggest taking a look at TradingView and seeing what's going on there on TradingView, because TradingView, it allows you to do something that not all Sierra, like for me, Sierra charts doesn't allow me to do this, but TradingView allows you to see cumulative volume profiles, right? Meaning that you get cumulative contract sizes on the S&P 500 futures dating all the way back until wherever you want, and that volume is reflected on the chart. In Sierra charts, if you don't have access to a continuous contract, when the contract expires every quarter, you lose that volume profile data. So I prefer looking at my large distributions on TradingView. So let's go find them, right? Let's take a look at TradingView. Let's take a look at how we can identify some of these large distributions, what some of the rules are, and what we should be looking for. So here we are. This is TradingView, right? And we're taking a look at these distributions here. So we can find distribution blocks on TradingView. I've just jumped into an hourly chart here to make sure that we don't spend too much time doing this, but we're just going to go over just some very key major distributions. So when we look at this on TradingView, distributions are bellies in the volume profile that stick out. There are a bunch of high volume nodes that get clustered together, and on each edge of the distribution, you find a very strong drop off in volume, creating a ledge, right? So in this scenario, we have a larger distribution that spans from 4120 into 4160, right? A 40-point distribution. You can see how prices hold out. When prices reject, they hold the tops, right? So on and so forth. So when we map these out, right, we can identify what the expected moves of price are. So expected moves of price realistically, right? You can see there's a distribution that I mapped out here into like these higher 50s that runs up all the way into the 4,300. And once we accepted that, we got that leg to the upside. So if I zoom out and we look at other areas, right, if I get consolidated moves somewhere, this wants to, so just zoom out on TradingView like that. So we have another distribution down here into these lows. We have that 4044 down into like the 39, like 45 or so. You can see how this distribution kind of shapes up. Once you get the actual data, you'll see that you have this actual distribution. So when you have TradingView, you can use like the visual, you can use the visual volume profiles. You can use the visible range volume profile, which allows you to see what is currently on the screen, right? So if I move the chart around, the distributions will change. Or I guess the volume profile will change. The distributions don't generally change. So the premise of this is trying to find where these large blocks of distribution sit so that we have those areas of balance in the market, and those areas of balance can give us an indication of whether price wants to either stay compressed or run to the upside or downside realistically. So the whole premise of finding all these distributions is finding where price is balanced and finding very key areas to trade at and within. Because when price runs away outside of a distribution, that means we're going from a compressive to an expansionary period. And the idea is if we want to stay expansionary, that prior distribution top should hold, right? So in this scenario, I don't even know if it's going to allow me to do this, but in the scenario that we had today, we have the top of the prior distribution at 42.50, and then we got the move above, right? We got a strong rejection and push into the 42.70s, and when we pulled back into that prior top distribution, 42.50s, we got our expected continuation. So it's very important to understand where your big distributions are, because we can start identifying where the market's expected to go and what levels the market's expected to hold. Right? We can go a step further with distributions and find ledges. Ledges are very just simply defined as big drop-offs in volume from a high volume node to low volume node. So not necessarily low volume nodes, but the drop-offs into low volume nodes from high volume nodes. When we have these ledges, those are going to be key trading areas as well where we expect prices to hold. So let's go back into what we were talking about. So using our large distributions, we can identify what the possible large directionality for the market is. Markets are going to use ledges of larger distributions as inflection points. So what I mean by this is if we have, let's say, let's draw out two distributions here. right? We can draw the blue distribution down at the lows, and then we have the green distribution here at the highs. So this is one distribution, below is another. So what generally happens is price rotates and holds the rejection of the distributions of the prices within it. At a certain point, price might escape, and it's not very common for price to accept into a new distribution block the first test it's had in a very long time. So the anticipated move, right, which we had over this last week, would be the rejection of the start of the distribution block to come down and find volume where it was very comfortable before. Now, if this is going to stay expansionary and we're going to continue that leg to the upside, this area is going to reject as well, and then we can find that potential balance in the distribution above. This is the general theory of how these distributions and balances should play out realistically. Obviously, when you get to those ledges and those distributions, you do want to have confirmation of some sort to make sure that these areas are actually going to hold or what they're going to do. So markets will run to the next distribution. If there's low volume in between those two areas, right, it's going to run into that new distribution a lot quicker. Markets will use the edges of distribution as support resistance areas as well. And this is a classic image of this, right? So we have a few major distributions that are set up here